Okay, let's talk luxury stocks for a second because huge impact from China. They were among the biggest losers yesterday, and investors now wondering whether the industry's big bet on China will be costly. Robert Frank is here with that story, always at the luxury angle.
This is interesting because Chinese consumers actually account for a third of all global luxury spending on luxury goods. Now, most of that growth is also coming from China, but now that's spending under a little bit of a threat. Luxury giants like LVMH, Kering, Richemont, Tiffany, Ferrari, all falling yesterday on concerns about their fastest growing market. Now, LVMH, which of course owns Louis Vuitton, Dior, and Dom Perignon, is down about 10% over the past week. CEO Bernard Arnault was the biggest loser among the world's billionaires yesterday. His fortune down $4 billion in that one day, down to a mere $92 billion. He used to be the second richest, now he's the third. Richemont, the owner of Cartier, Montblanc, down 12% over the past week. Tiffany faring a little bit better, down only about 2% yesterday. The luxury stocks had been soaring this year on the back of China growth. Now, the weaker currency will make those imported European goods a lot more expensive in China, and the number of Chinese millionaires down about 5% over the past year as the economy and markets have slowed. And then you've got the unrest in Hong Kong causing problems for the Swiss watchmakers because Hong Kong is their biggest market in the world. Now, so far, luxury companies have not changed their outlook for China, projecting 18 to 20% growth this year. In its earnings report last week, Kering said that, quote, trade tension and the slowing Chinese economy do not seem to have weighed on spending in luxury goods by Chinese consumers. Of course, that was last week. We'll see how it fares this week.
More than any other country in the world, the Chinese do not spend, they do not travel when their currency devalues even a little bit, which underscores to me why, long-term, China cannot devalue their currency.
Yeah, and
if they want to be consumer-led.
And China did this interesting thing, which has gone unnoticed in the press, which is that they repatriated luxury spending. So for decades, most of the spending by Chinese on luxury goods was in Europe, in the United States.
But it didn't change on the brands. The companies set up boutiques in those markets.
That's right.
The long term on these stocks, and I own them all, and even though they'll be vol, is that as that middle class...
You own all the products and the stocks.
Well, that's true, too. But, you know, I look at it and say to myself, over the next 10, 20 years, the emerging middle class, upper class in China will become 50% of this market. And what amazes me is these are the brands they want. There is no domestic Chinese fashion brand they're screaming for. It's got to be one of these global brands, whether it's a Montblanc pen or an EP watch. The reason I can't buy a white-faced steel Daytona now is still China,
That's
China,
right.
Hong Kong, and China. You can't buy one of those anymore.
You
can't?
It's impossible. It's impossible. It's exactly what they'll tell you when you walk into a New York boutique. You'll never see one.
That's true, but all of that theory depends on almost a straight line growth for the Chinese consumer, and that's a big question now, coupled with currency.
I'll take my chances. I think those people are going to want those watches forever.
Okay, so I want a white face.
You will never
Daytona.
have one. You will never.
Why
get
not?
one.
I mean, if he can't have one.
Or a Patek Nautilus, that's his favorite.
I begged him to buy one when the buying was good, but no, you
Look at
wouldn't
this.
listen.
This Apple Watch is killer.
Oh,
come on.
Anybody can have that.
This is a fabulous thing right here.
Are you
The utility.